The smart money concept is a powerful tool for identifying entry points. It is so accurate that it is used by many experienced traders to gain significant profits. I've discovered a super powerful and accurate smart money concept indicator setup with buy and sell signals. This setup can be used for day trading, swing trading, scalping, and can also be applied to all markets, including crypto, stocks, forex, options, and futures. These indicators help you find important points on your charts, making you a better and more profitable trader. I'll also guide you on how to use these indicators on your charts. Additionally, I'll introduce an indicator that gives you signals for when to buy and sell in the market. Let's get started. Go to TradingView.com to check out the price movements on the charts. You can also find the links in the description for your convenience. For this demonstration, we're focusing on the pound sterling to Japanese yen currency pair using a 1-hour time frame. This strategy can be applied to different time frames and various financial assets, including cryptocurrencies, forex, and stocks. Now let's break down what an order block is. An order block is a concept that shows when large financial institutions are accumulating orders. They use these order blocks to split big orders into smaller ones, getting better prices without disturbing the market too much. So it's essential for traders to know how to react when order blocks form because they often create key decision points in the market. Thankfully, we have indicators that help us find these order blocks. Let's start by adding our first indicator. Click on the Indicators tab at the top left of your screen and look for the Pivot Order Blocks indicator. This indicator was created by the Trading Wolf, and you can find it in the list of available indicators. Just click on it to add it to your chart. Now that we've added the first indicator to our chart, let's quickly go over its settings and make some changes. In the Input section, change the wick setting to body and set the box sizes to 30. You don't need to make many changes in the Style section. After these adjustments, click OK to proceed. The Pivot Order Blocks indicator uses pivot points and their psychological importance. Pivot points are specific price levels that can predict when the market might turn or reverse. They're calculated using simple math based on the previous day's high, low, and closing prices. Some traders use pivot points to find entry levels, set stop losses, and plan their profit-taking strategies. The idea is to figure out where most other traders are likely to make similar moves, which helps in decision-making. This strategy works well because pivot points give traders established support and resistance levels. The red and green blocks you see on the chart represent bearish and bullish order blocks. The smaller, faint white blocks are points of interest levels. Although this indicator doesn't label each block explicitly, when you see a green block, it means there's an accumulation of buy orders, suggesting you should look for confirmations before entering. When you spot a red order block, it indicates an accumulation of sell orders, helping you make informed trading decisions based on market sentiment. Let's look at a specific example on the chart. When the price reached a certain level, the indicator identified these points of interest using the faint white boxes. Afterward, the price went down. Then, a bullish point of interest appeared, causing the price to go up. But when a bearish order block like the one shown here appeared, the price dropped significantly. This suggests a strong accumulation of sell orders, or a big sell-off. It's important to note that there's more to understanding these downward movements, which goes beyond this video's scope. If you want to learn more about such in-depth content, please support us by liking this video, subscribing to our channel, and turning on notifications to be notified of our new videos. I greatly appreciate your engagement. Now let's look at the second order block indicator, so you can choose the one that fits your trading strategy. In this example, we're looking at the price chart of the EUR-GBP currency pair. To add this second indicator, go back to the Indicators tab and search for Market Structure Break-in Order by MBB. Click on it to add it to your chart. Next, let's quickly review its settings. In the Input menu, you can adjust the zigzag length to 7 and change the Fibonacci factor value to 0.618, which is the golden ratio. You can also set the text size to normal and the text color to white for better visibility. You can either explore these settings or leave them as they are, as the indicator works well with its default settings. After making your adjustments, click OK to proceed. This indicator reveals elements of market structure breaks, BOS breakout setups, and order blocks. A bullish breakout happens when the price goes above the most recent higher highs, and it's shown as a green market structure break. A bearish breakout occurs when the price drops below the most recent lower lows, and it's displayed as a red market structure break. The indicator also uses zigzag patterns to highlight market structure by showing lows and highs. The order blocks can be supply and demand zones, helping traders make decisions. This order block indicator is one of the most accurate and user-friendly tools I've encountered. It's a valuable tool for traders looking to improve their trading strategies. Here, we have the US dollar to Japanese yen currency pair on our chart, set to a 1-hour time frame. Take a moment to see how accurate this order block indicator is and how price action follows these bearish and bullish order blocks. The zigzag line helps identify price highs and lows. The bearish and bullish market structure breaks provide confirmations for your directional bias. For instance, you could have used these signals to consider a short trade or a long trade. Let's look at another example to illustrate the effectiveness of this indicator. This time, we're focusing on the pound sterling to Japanese yen currency pair with a 1-hour time frame. The market structure and break indicator effectively highlights the bullish order flow. Understanding order flow is essential for finding the right entry points and making timely trades. The zigzag line helps track price highs and lows, and the market structure point helps identify potential changes in price direction. These tools combined can help traders make informed decisions and navigate the market with confidence. Now let's explore the third indicator, which is the buy and sell indicator for this strategy. In this example, we're looking at the price chart of the pound sterling to Japanese yen currency pair. To add this indicator, go to the Indicators tab and search for Twin Range Filter by Colin McKay. This indicator is chosen for its accuracy in predicting future market directions. Click on it to add it to your chart. Once the indicator is added, let's quickly review its settings and make any necessary adjustments. In the input section of this indicator, change the fast period to 50, the slow period to 35, and the slow range to 3. You don't need to make significant style changes, so leave those as they are. After making your adjustments, click OK to proceed. When you see a trending market with a successful pullback, the Twin Range Filter provides a long signal. This signal suggests that the price is likely to go up and continue the trend. To see how these indicators work together, let's also add the market structure and order block indicator to the chart. This combination helps you assess their accuracy and effectiveness together. When the market structure and order block indicator highlight an order block, it confirms a long trade entry signal from the Twin Range Filter. In such a case, you could have entered a long trade at the close of the candle and placed your stop loss below the order block, using a 2-to-1 risk-reward ratio. Another confirmation comes when you see a break of structure followed by a pullback and another long trade entry signal from the Twin Range Filter. This gives you another opportunity to enter a long trade. Let's look at another example. A long signal occurs in an order block. You place a long trade, set the stop loss below the order block, and set a take profit at a 2-to-1 risk-reward ratio. By stacking these positions, you will accumulate your capital very quickly. This strategy is incredibly powerful, but many people execute it incorrectly, leading to financial losses. Therefore, I have created a comprehensive PDF guide on this strategy to ensure that you execute it correctly. It will be very convenient for you to reference the best settings and implement the strategy effectively. If you want the full PDF note about this strategy, including the link to the indicators, the best settings, and a bullet point of the concept, you can join our SuperTrade Discord server and download today's strategy note from the Note channel. I will also share market analysis, important trading dates, and a ton of trading tools for all markets, including crypto, forex, stocks, options, and futures in our SuperTrade Discord server. You can join the SuperTrade Discord server by going to supertrade.pro/discord, or you can find a link in the description. If you found some value in this video, consider hitting the like button and subscribe to our channel. Goodbye, trader. See you next time.